Mahesh Patil, Co-Chief Investment Officer with Birla Sun Life Mutual Funds, joins us live from his Mumbai studio with his take on markets. So Mahesh, good morning. Thank you for joining us. Mahesh, on-ground facts and fundamentals have not changed, but the perception and the appetite to buy into Indian equities has surely changed.
Yeah, that's true. We have seen actually a global kind of risk-on rally in the recent times, and India has also been a part of that. I mean, the fears about tapering happening early, I think that are now dissipating fast, and looking at the state of the US economy, it looks like people are now talking about tapering to start somewhere in the later part of first quarter of next calendar year. So I think all that has meant that we have seen a decent amount of flows into our markets, and actually the depth of the market is very, very shallow. So we have seen any small amount of buying leads to a flare-up in prices. And domestically, we have seen a spate of negative news coming through. But I think to a large extent, I think market is discounting that. In fact, the recent numbers in terms of inflation slightly higher. That also, I think, puts some kind of a delay in terms of rate cuts. So we're probably looking at rate hikes rather than rate cuts in the near term. But despite all that, I think the markets are showing a lot of resilience. We believe that the markets are probably at the higher end of the band what we are looking at from a near-term perspective. But from a medium to long-term perspective, I think clearly we feel that we are in a bottom-out phase for the market. Even the economy should bottom out in the December quarter. That's what our belief is. And slowly and steadily as we move forward towards elections, I think market will try to take a view in terms of what kind of a political environment builds up. And that would really drive the market movement from a medium-term perspective.
Are you a bit worried about the pace of the appreciation? Because clearly we are in a very strong liquidity-infused market. And historically, every time markets have gone up on liquidity, the end game has been quite dangerous.
Yeah, I think whenever the markets move up purely on basis of liquidity, ignoring the underlying fundamentals, I think there is a cause for worry, because if the tide turns, you could see a sharp correction. So I think precisely from that standpoint, at this point in time, we are a bit cautious on the market, though we believe that fundamentally there are a lot of good stocks in the market, which have got good earnings visibility, which will continue to move up slowly and steadily. So in this kind of environment, we're not getting carried away in terms of getting away in some of the weaker stocks, fundamentally weak stocks, companies with high leverage. So we're staying away from those names. Though we have seen in recent times the breadth of the market has improved quite a bit. So we have seen the mid caps and small caps doing much better in the recent past. And that's purely from the fact that we have seen these stocks have underperformed significantly in the last 1 year or so, especially year till date. And valuations are looking a bit attractive. So some catch-up game happening in the small and mid-cap space. But yeah, clearly, I think we are also entering into a results season right now. So I think the stocks movement will also be driven to a large extent how the quarterly numbers come in. And that's something which we will be watching closely.
Mahesh, what do you make of the price action IT? Yes, in the near term, the fundamentals are quite supportive for IT stocks and exporters in general. But somewhere, do you think prices are now slightly looking stretched and large cap IT stocks are now approaching bubble territory?
Well, we have seen that whichever sectors there have been good amount of earnings visibility and stability, market is willing to pay a premium for that, especially in an environment where the domestic outlook is pretty weak. So we have seen that initially in the FMCG sector, then in the pharma sector. In the IT sector also, we have seen greater visibility in terms of volume growth, especially in the US market. We have seen some uptick in discretionary spending, and that's reflected in terms of the volume growth, what we are seeing in these quarterly numbers. And to some extent, tailwind coming in from rupee depreciation. Though I think recently rupee has appreciated, but I think if you look at any forecast from a medium to long term, people expect rupee to depreciate by around 4 to 5% annually. So I think all these factors gives better higher growth rate for these companies. So earlier you were looking at around 12-13% kind of a growth, revenue growth. Now we're looking at more than 15-16% kind of a top line growth. and with some margin improvement, our bottom line growth can be around 20%. So I think PE multiples are also expanding in line with the kind of greater earnings visibility and higher growth what we are seeing in the foreseeable future for the IT names. So I think very difficult to say what's the bubble territory, but as long as we continue to expect strong numbers, I think the multiples will sustain at these levels.
Mahesh, I was trying to question you about the banking pack, and clearly the kind of rally that we saw in the entire PSU banking pack, or rather mid-cap banks, I should say, after the RBI governor's comments in anticipation of heightened M&A activity in the entire banking sector. Having said that, today you're seeing the rally completely ease off. Does it seem like the asset quality concern clearly is a bigger overhang on the sector right now?
Yeah, I think the banking sector clearly is a play on the economy, underlying economy. We have seen economy not really recovering. In fact, it's deteriorated further looking at the IIP numbers. And even this quarter GDP number would also be pretty subdued. Given the fact that interest rates are also not really likely to come off significantly, I think the stress on the asset quality will continue. And we have seen the number of cases which are being referred to the CDR cell have been increasing. And that's a reflection of what to expect in the next few quarters on the asset quality side, especially on the corporate borrowing and also the mid and the small enterprises. So and that's something which would be a bigger factor, especially when you're looking at the banking stocks, because any increase in the asset quality on the stress assets would have a significant impact on the book value and in terms of valuations. So I think that's going to be the pre-overriding factor, especially for the PSU banking space in the next few quarters.
Mahesh, what explains the underlying strength in industrial stroke capital goods stocks? The IP data was horrible. Growth has not bottomed out. Private sector capex has not started. But despite such a sticky environment, stocks like L&T, BHEL, Crompton, Thermax, they are up more than 10 to 15% from the recent lows.
Well, I think there could be one view which the market is taking, or some investors are taking, is that, yeah, we are at the bottom of the cycle at this point in time, so everything is looking bad. And if at all, if you take a slightly longer term view, when I say longer term, 1 or 2 year view, then as we move out from this cycle and as we near elections, I think there is a hope which is emerging that the next capex cycle will start somewhere in the middle of next calendar year, post-elections. And a lot of these stocks are now quoting at very, very low valuations compared to the long-term averages. And typically, and we've seen some kind of a sector rotation also happening more recently. Some of the sectors, cyclical sectors especially, where the valuations are beaten down. And some likelihood of recovery in the medium term, we are seeing some interest coming in there. So I think it's slightly early days, as you said rightly. We are not seeing any fundamental pickup in terms of order inflow, and will take some time. But someone with a longer term view, if you take a longer term view, this is a good time to start accumulating the stocks, because when things turn, we see a sharp operating leverage coming into play, and that leads to a bigger upside. So I think it's more of kind of a contra buying in these stocks at these levels is what's kind of driving the prices at this point in time.
Mahesh, the BSE Auto Index made a fresh lifetime high yesterday. But for someone looking at an entry point at this juncture, is there enough value on the table?
Yeah, in the auto space, again, this is a sector which has suffered in the last 1 year. We have seen a dramatic slowdown in terms of auto volume growth, especially discretionary spending has got impacted. But I think, again, this is a sector where we have seen a lot of the companies, the frontline names, able to really manage their margins, especially in a weak environment, pretty well. So while volumes have